Budget 2022 and digital assets. A new dawn for investors. The recently presented Budget 2022 has been a sort of mixed bag for digital financial assets. Let's take a closer look and analyze the impact of the measures announced with respect to making digital assets more investable. We'll also look at how they compare with other investment options. But before we dive into that, let us understand what makes an asset investable. There are three key criteria for an asset to be agreed upon as an investable one. 1. It needs to be a credible store of value. That is, it must be able to retain its value over the investment horizon with a reasonable degree of certainty. For example, real estate, equities, and gold have proven themselves to be reliable assets that store value over long periods. Then, it needs to meet all legal and regulatory compliance for it to be an attractive investment avenue. Despite arguments put forth about how digital assets cannot and should not be regulated by governments or government agencies, governments have the capability to effectively stop investments in digital assets should they deem it appropriate to do so. And therefore, legal and regulatory legitimacy makes any asset more investable. And last, there needs to be a functioning market to buy or sell the asset with reasonably predictable market liquidity. That means there needs to be enough interested buyers and sellers to enable the purchase and disposal of assets. In the past, the unacceptably high levels of legal and regulatory uncertainty around digital assets had rendered digital assets pretty much uninvestable for most serious Indian investors. The consequences of a ban on digital assets, as was feared by some, were unknown. But by introducing a 30% tax on gains on digital assets, the government has eliminated a chunk of this uncertainty. This brings more legitimacy and makes them reasonably investable. Now that brings us to the next question. How do digital assets compare with other investment options for Indian investors? Examining the broad asset classes available for the Indian investor, fixed deposits, traded equities, and urban real estate have an established track record of returns. They sit within evolved and time-tested legal and regulatory frameworks. Riskier investment options with the potential for higher returns include investment in suburban land, angel investments, and investments in small private businesses. These can be bundled under the umbrella of speculative investment. The probability of negative returns or loss of principal can be significant in such speculative investments, both due to genuine economic losses as well as legal challenges. For example, when there is a lack of ability to enforce ownership of a piece of land in a suburban or rural area when it is encroached upon. While that doesn't make them uninvestable, it comes with a higher risk that many investors might have an appetite for. An argument can be made that digital assets should be viewed as speculative investments, at least in their current form and state. The reason for this is that due to their recency and lack of track record, digital assets are yet to establish themselves as a credible store of value. Another point of concern is that the risk of disruption from technological developments is not fully understood, nor can they be predicted with certainty. Any technological developments that can take a blockchain apart, say using quantum computing, will pretty much destroy the value in cryptocurrencies and NFTs overnight. Therefore, much like other speculative investments, the probability of negative returns or loss of principal is significant. But on the upside, digital assets do offer the possibility of returns that far exceed anything that established asset classes can currently offer. While it can make or break someone, one needs to remember that both are very likely. However, the proposed tax of 30% on gains on digital assets is higher as compared to the tax rate of other asset classes. The recent budget will likely help digital assets find a place in Indian investment portfolios. It is our view that it is prudent to treat digital assets as speculative assets for now and be cognizant of that fact when deciding on the portfolio allocation.
Want more information? Visit us at www.herowired.com.